Hello traders out there in Traderland, D7 here with freetradingvideos.com, and the markets are mixed. As you can see here, the Dow up just a fraction, so is the S&P. Usually those two will go together, but those that tend to lead the market, the Nasdaq and the Russells, were both down today, and the VIX just a little while ago was actually up now, and it's right now at this very moment has adjusted. Now it's slightly down at this moment at 23. Very nice to see it there at the 23 mark. Here's the S&P daily, rising wedge. And be careful dismissing technical analysis. I know we've had a couple rising wedges here as of late. We had one right here that turned into a bull flag. Nonetheless, we did drop, but it did turn into a bull flag because of where we were. But to say that you saw one that didn't come in through fruition and dropped, and had a continuation down, to dismiss the next one would be an error. Here we have a rising wedge that did break its support level here. A lot of times when something breaks, it will come up and retest. We have support, we broke the support line, we rally back up. What was acting as support is now acting as resistance. With the rising wedge, we also had a bearish divergence on the MACD. So we have a lot of bearish signals playing out. But nonetheless, we have another up leg. If you look here, we had an up leg here and then a down leg, up leg here, and then this down leg. Here we have another up leg ready for a down leg. If the down leg were to come right now, the problem with this would be that would create a double top. Let's blow this up a little bit so we can really see what's going on here. Here we're making higher swing highs. What is that? An up leg, a down leg, so there's a swing high, another up leg, down leg, swing high, a swing high. They look like mountaintops, higher swing highs. If we get a down leg right there, that will not be a higher swing high, but an equal swing high. That would make the beginnings of a double top trend reversal pattern. Double tops are bearish, and if that were to break down, the only time that's confirmed is if this low right here at this 1025 on the S&P were to get snapped. That would have to break down. If that breaks down, then we are starting a trend reversal with a double top formation. What was interesting with this trend line today, this popped up, challenged that 1080 mark, as we said in the video over the weekend, that would be a resistance area. Challenged it, came right back down, closing where else? On that trend line. Closed there perfectly. And I'll tell you, today when I saw this at 1080, I said, how much would I bet we come crashing right back down and close on or below that trend line? And sure enough, that happened. So at this moment, gang, I'm sitting on my hands. I'm hedged. I do have some longs. I have more longs going than I have bearish positions going, obviously, because we have an up leg and we're above all the moving averages. But I did put a pretty nice stout short to help protect myself with the reverse taking place that could happen. I plan on going golfing tomorrow. The rest of this week, I could just be sitting on my hands. Why is that? We have retail sales coming out on Wednesday morning. So Tuesday, tomorrow, I plan on, I don't plan on holding too much, and what I am holding, I will be hedged going into those retail numbers pre-market on Wednesday. And then Thursday, we have the big CPI coming out pre-market. So this week, I'm going to relax on trading, and actually, I'm going to go a little deeper with you and show you why I am just taking a breather on it. Oh, I already have a line drawn on that. Let me show it to you. Here, this is the spiders or the ETF on the S&P. We're going up. Nice rally here. Nice run. But look what's happening to our volume. Do you see how volume is dissipating? Now, we do pop up over this line a little bit. Let's blow this up so we can see it. But do you see how those bars are red? The volume is spiking on the sell parts of this trend that we're in. So here we're in a pullback. We have an increase in volume. Here we pulled back, we increased in volume, and here we pulled back with an increase in volume. On our rally northbound, we have dissipation of volume. We're dropping. See this? This is a 20 bar moving average right here. This little moving average coming across, and we're well below it. This is very thin volume, gang. I mean very thin. So you want to be careful trading this. What that's telling me is you don't have a lot of interest of buyers up here in this area. Why is that? Well, maybe they're seeing a down leg getting ready to form. Again, if this down leg were to start forming, it could be a brutal first or second day dropping right here. But it could get really turbulent in this area. It has to be a big down leg to break this low to confirm a double top trend reversal. So give it some time. Be patient with it. Feel free to sit on your hands. That's up to you. I can't tell you what to do with your own trading. But I'll tell you this, for me, in my trading, I'm sitting on my hands this week, and if I'm, like I said, I plan on golfing tomorrow. But I will certainly be doing day trading because we should get some nice volatility here in the market. So happy trading. Be safe out there.